Cash flow versus profit, 2017. And we are still talking about this. Many entrepreneurs going through that challenge. Why am I not making the money that I was supposed to make? I even marked up my prices. I'm still not making that profit. Where is the issue? How do I calculate if I'm making the profit that I thought that I was going to make? Well, today we're going to talk about the order in which you manage your books. The order that you have to keep in order to know what are your expenses, what are your, income sales, what is your average a month, and what's the formula to calculate properly what is my profit margin. So many entrepreneurs, we go through this. It's a common issue among entrepreneurs. Well, my name is Esther Tanez, owner and founder of Esther Inc. Insurance Agency. And today with the Journey of Entrepreneur, we're going to go over some really nitty-gritty, basic information that every small business owners go through. So, as you can see, I'm in a different spot today. I'm working from the house. Lots of snow out there. I cleaned my driveway. I did everything. And guess what? No, I couldn't drive. The car was slippery. So anyway, let's go over the first thing that you go over is, the first thing you go over is your fixed expenses versus your variable expenses. What are your fixed expenses? So, hi Jason. Your fixed expenses are your monthly expenses. They're very static. It's your rent or your mortgage, your phone, your utilities, your payroll, things that you have to pay on a monthly basis. Maybe you have advertising costs that you do every month. These are very consistent and almost pretty much the same amount every month. Very rare. It's a very slight change every month. Those are your fixed expenses. But what is a variable expense? A variable expense is a expense that may change due to a sale. What do I mean by that? You may have a bigger project and might have to hire some temporary work, or you may have to buy more materials because this specific project is asking for more materials, more supplies, or more time. So those are variable. Anything that is connected to a sale, it's a variable expense. Anything that shifts and changes in your business. It's very important that you calculate those variable expenses, because that is the one first loophole that many entrepreneurs make. It's a mistake that's made when they're doing their numbers and giving out prices. And as an insurance agent, we have all kinds of small businesses, but one of the most that I have is contractors, and I see it all the time. They get a big project, they're so excited, and all of a sudden at the end of the project, they find themselves short. And it's because they didn't calculate how many more people they would need for that project, how much more materials. And they're giving out the price based on the standard and not with those changes that are happening with that project. So the number one thing you have to do in order to know what is your cash flow, how are you doing, is know your expenses. So when you know your expenses and you can calculate, well, how many sales do I need to make to cover those expenses? You don't know your expenses, then you really are not going to know, am I making money or not making money? And there's a difference. Cash flow is the money that comes in and out. It covers the expenses that came into the business. And so many business owners, forget to calculate what their monthly expenses are. So number one, know your fixed expenses and your variable expenses in order to know if you are having cash flow. Hi, Deborah. Hi, David. Hi, Ray. So that's number one. So cash flow is the money that comes in and out. It's not profit. It's not profitable yet. Just because you have, let's say, $100 in expenses a month, let's just start really small, right? Let's start really small, $100, and $50 came in. Well, that's not enough cash flow, right? And let's say $150 comes in, and you're thinking, oh my God, I have a $50 profit. No, you don't. It's not a profit yet. We have other expenses that we have to calculate. There are gross profits, and then there's net profit. So I'm very excited. I'm kind of a numbers girl, so I love talking about this. So what is your true cost for your product or services? What is it costing you? And what is the average sale that you need to make? How many sales do you have to make to cover those fixed expenses? And when there's variable, how much more do you have to sell to cover the variable expenses? That is important. And if you're interested in a formula, please email me or inbox me and I will tell you how to calculate. Okay, and I want to take this time to, thank you all for sharing and liking and subscribing to YouTube. I truly appreciate it. I don't forget to continue to do that so that you don't miss any of the steps here on the videos that we're educating and informing you on how to run a business efficiently. So, how do I calculate? So I put the formula on top, and if you cannot see it, I'll send it to you. It is very simple. It is the price sale. Let's say you sell something for $120, right? You're selling something for $120 and it costs you $100. And very simple, you think, well, I made $20, right? That's my 20%. No, there's one more step. You take that $20 and you divide it by the price sale, the $120. And when you get the answer, it will be 16.6%. You did not make the 20% that you thought you were going to make. So that's important. And people make that mistake all the time. And it says, oh, I just added 20% on top and now I'm going to make 20%. But that's not really your margin. Your margin, if you only put $20 on top of the $100 and it costs you $100, right? So you take the $120 and you divide it by the $20 and you'll see it is 16.6. So you really made 16.6 on your profit margin, not 20%. So how do you get to 20%? You have to do your number. It's about 26. If it's $100 a cost, it's about $26 more to make your 20% approximately. So let's say it's a little bit more than that. Let's say that the cost is $100 and you're trying to make 50%. Well, what number would get you to 50%? What would be a 50%? $100, right? You would take $200 and 100 is 50% of your $200 if you're selling it for $200. But is a client willing to pay $200 for your product? So you have to be very careful. Do I make my prices too high, the profit margin too high? Or do I increase my prices? Do I have enough customers that will pay for that? Or do I decrease in cost? But when you're decreasing in cost, the other mistake people do is quality. Do not decrease in quality. What I will tell you to do is increase in efficiency. One of the things that I went through when the market crashed and there was not enough sales and people were not buying as many homes, people were not buying as many cars, etc., etc. One of the things that we did was we increased technology, and it made us, each of us, able to work a little bit more efficient. So if you come to my office, most of us have 3 monitors. Why? Because we can monitor things at the same time. So when the client is calling, if they're calling about, oh, I send you an email, we can look at the email, we can look at their files, and we can calculate a price on the 3rd monitor. And being able to do those things consistently, one after the other, right at the same time, the client doesn't feel like you're wasting their time. You're being more proactive, more efficient. You're processing that need of the client much faster. And so we increased efficiency, and our profit margins went from 15% to 30% just by doing that. I have the same staff, same 7 people, and same 7 people taking care of the same quantity of people, actually more. And we're able to process more phone calls because we increased in technology. So we didn't decrease in quality. Efficiency and quality are the top 2 things that every small business has to make sure that they have. Otherwise, you're going to lose clientele, right? No customer wants to go to a place that they're not being taken care of or not being heard or not being answered. So it's very important that you can handle more incoming clients, right? So that you can increase your profit margins. But the way to do it is to decrease costs, right? But also increase efficiency. And that is crucial. So going back to the profit margins, everybody gets confused with that. I increased my price by 20%. Why am I not making 20%? Why am I short? Well, do you know your expenses? Do you know your variable expenses? That's number one. Once you know that, do you know what your real cost is per sale? I know my numbers very clear. I know what my clients cost me, and I know what if I even know when a customer is no longer profitable. I know how much service I have to give them and how much of my staff has to get involved with one customer when that client becomes non-profitable. And so it's very important that you study your business really well, and dealing with an accountant or CFO, someone that can analyze your business really well, can help you really know how many sales to the T and what client is worth your time and which clients are profitable. And I hate to sound like that. You must say, well, yes, sir, everybody is worth it. No, not everybody is worth it. And not every client is your client. And we're not for everyone. Every business has its own niche and its own clientele. So you need to understand which are your A clients and which are your B clients, so that you can make sure that your business is profitable. If a client of mine starts to call me 3, 4, 6 times in one day for the same question, that is not profitable anymore. My employees don't make $7 an hour. So I have to know what's the problem here. Did we not communicate? Are we not submitting information on time? Or is this customer is so disorganized that it's now costing us time? You know, I am all for answering all questions and taking care of all my customers. That is true. But if the customer is not organized and needs to call us 3, 4, 5 times for the same question, it becomes now, is this customer going to be worth it? What is the premium? What is the commission that I'm making? How much am I spending? How many of my staff members are getting involved with one client? And this is why we increase technology, so that we can communicate with our clients more efficiently, more quickly. So very important that you know even that, to know your profit margins. How many sales, what are my expenses, and what is my profit margin? And let me tell you, there's a big difference between gross profit and net profit, because your gross profit is what comes out after your basic expenses. But then there might be other expenses like your taxes. Most people forget to include their taxes. I don't know why. Insurance is another thing they always forget. You know, I have many contractors who says, oh my God, I sold all this and I didn't realize that my insurance was going to be that expensive. Let's see, you're a roofer? Yeah, of course insurance is going to be expensive for a roofer. Or, you know, or big restaurant with dancing and you know, open bar and all that stuff. Yeah, those businesses are high risk. Those people, those businesses are more exposed to lawsuits and all of that. So yeah, certain premiums are more money. So calculating your expenses and knowing ahead of time what your expenses are going to be so that you can calculate it well, it's very important. So my name is Esther Tanez. Enjoy today here in New Jersey. It's lots of snow out there and very slippery, so be careful. Thank you so much for joining me. Feel free to send me any questions, inbox me, share, like, and follow us on YouTube. Have a fantastic day. Ciao.